Imagine doing absolutely everything right with your money. You pay on time, you avoid crazy debt, you are the picture of financial responsibility. But then, you go to buy a house, and the bank essentially tells you that you don't exist. Well, in today's Explainer, we are diving into a massive financial mystery that quietly derails thousands of military families across the country. We're looking at why military life absolutely wrecks credit, and more importantly, how to fix it. To really get this, let's look at a case study. We'll call her Sarah. Sarah is an active duty spouse, and like I said, she had perfect financial behavior, literally 0 missed payments. But despite all of that, her credit was mysteriously, completely ruined. So how does someone do everything right and still get penalized by the system?
Well, the answer actually starts with a number, 6. That is the exact number of times Sarah and her husband had to pack up their entire lives and move across the country in just 8 years of marriage. If you know anything about military life, you know this transient lifestyle is just par for the course. But here is the bizarre, frustrating part. Every single time Sarah moved, her credit score took a massive hit. And remember, she wasn't missing payments or maxing out cards.
Fast forward a bit. By the time Sarah and her husband were finally ready to settle down, put down some roots, and buy their first home, they sat across from a mortgage lender who gave them a piece of advice that left Sarah absolutely furious. It was a shocking revelation that completely wiped out her years of partnership in their marriage. Now, I'm going to tell you exactly what that lender said, but hold that thought for just a second. Because to really understand why this happens, we have to look at a massive, fundamental flaw in how credit is calculated for military families.
Let's look at this stark contrast, because it's basically oil and water. On one side, you have the reality of military life. The average American moves, maybe once every 5 years? Military families are moving every 2 to 3 years. It's a new state, new address, totally new routine. But look at the other side of the equation. Credit bureaus, your Equifax, your Experian, they are built on these rigid algorithms that reward the exact opposite. They love extreme stability. They want you living in one place, keeping the exact same accounts open for decades. So what happens when your normal, everyday life is literally the complete opposite of what the system demands?
Well, that disconnect leads people to make accidental mistakes. And that brings us to mistake number 1, closing local accounts. And honestly, this happens because it actually feels like the smart, responsible thing to do. Think about it. When you're packing up your whole life for a move, there is this huge urge to tidy up, right? Spouses will often close out their old regional credit union accounts or maybe a store card for a mall they're never going to visit again because it's now 3 time zones away. Shutting those down just feels like good housekeeping.
But here is the hidden, punishing math behind that urge to tidy up. The second you close that old local card, the credit bureaus see your average age of credit history instantly get younger. Boom. Plus, you just wiped out a chunk of your available credit, which negatively spikes your credit utilization ratio. So, by simply doing what felt like responsible decluttering, you can accidentally trigger a sudden 20 to 40-point drop in your credit score, just like that.
Which brings us to mistake number 2. And this one is way sneakier. It's what we call the authorized user trap. Look, when a service member deploys, it is super common and super convenient to just add the spouse as an authorized user on their main credit card. It keeps the family money accessible, right? Seems like a totally safe bet. But relying entirely on this setup is a massive hidden danger.
See, here's why. If you are only ever an authorized user, you end up with what the industry calls a thin file. Basically, the credit bureaus look at you and say, we don't have enough independent data to give you a strong standalone score. And it actually gets worse. Let's say your deployed spouse misses a payment because they're stuck somewhere with 0 communication. That missed payment damages your score, but all those years of perfect on-time payments, that never actually builds your primary independent profile.
So, the whole thing really boils down to this one crucial point. You absolutely need credit that is yours. Not yours through your spouse, yours. Think about the what-ifs. What happens if the marriage ends? What if your spouse is deployed for a year and you desperately need to finance a car or sign a lease for an apartment? If your entire financial identity is tethered to someone else, you have literally no financial legs to stand on.
Okay, so this perfectly sets us up to answer our mystery from earlier. We know Sarah was an authorized user. We know she responsibly closed her old local accounts every time they moved. So when she finally sat down across from that mortgage lender, what did he actually say to her?
The lender looked dead at her husband and said, "Apply for the mortgage without her." I mean, just think about how devastating that is. After 8 years of a real financial partnership, managing the household, doing everything right, Sarah was essentially invisible to the credit system. Her thin file was so weak that putting her on the loan would have actually pulled their combined qualifying score down and penalized them with a terrible interest rate.
Yeah, we absolutely cannot let that happen to you. So it is time to pivot from the problem to the solution. Let's dive into the Military Credit Playbook. This is a 5-step strategy specifically designed to build bulletproof financial independence for military spouses and completely avoid what Sarah went through.
Strategy 1 is your foundation. Build primary credit early. Step 1 is simple. You need to open at least one independent starter credit card entirely in your own name. Step 2 is all about the timing. You really want to do this before your very first PCS move. And Step 3, use it lightly, maybe buy gas or groceries, and pay it off in full every single month. The beauty of this primary account is that its history travels with you, personally, all across the globe. It is totally untethered to whatever base you happen to be stationed at.
Okay, moving to strategy 2. This is the antidote to that tidying up mistake we talked about. Never, ever close your oldest account. Seriously, identify whatever your oldest credit account is right now and make a hard personal rule to keep it alive. If you're worried about managing it from 3 states away, utilize military-friendly banks like USAA or Navy Federal. They literally expect you to move. Or if it's a card with a crazy high annual fee, don't close it. Just call the bank and ask to downgrade it to a no-fee version.
Now, strategy 3 is where things get really fun. Strategic PCS moves. We are going to take the massive liability of moving constantly, and we're going to completely flip the script. We're turning this into a unique, powerful advantage that civilians basically don't have.
Check out how this master plan plays out over time. Instead of closing accounts when you move, you strategically add one. So, in year 1, you get your starter card. By year 3, at your first new duty station, you open a low-fee local credit union account. Year 6, a regional bank account at your next stop. Year 8, maybe a secured credit builder loan. Over the course of a military career, by keeping the old ones alive and adding diverse local accounts at each new stop, you're going to build a much thicker, more robust credit file than someone who never even left their hometown. It's brilliant.
All right, strategy 4 is vital. Protect yourself during deployment. We have to talk about this because, let's be honest, financial protection is almost never top of mind when you're dealing with the absolute chaos and stress of prepping for a spouse to deploy.
So here is your no-nonsense deployment checklist. Step 1. Set up auto-pay for at least the minimum payments on all shared accounts before they leave. This completely removes the risk of an accidental missed payment tanking your score. Step 2. Contact your bank or base counselor. Step 3. Explicitly invoke the Service Members Civil Relief Act, or the SCRA. This is a massive, incredibly powerful law that offers wild protections on interest rates and financial obligations during active duty. You have to use it.
And finally, strategy 5, free financial counseling. Guys, there is a completely free, wildly underutilized resource sitting on every single military base in the country just waiting for you to walk through the doors.
We're talking about Military OneSource and Family Readiness Centers. You can literally walk in and get a one-on-one, highly personalized review of your specific credit file. These counselors actually understand the weird challenges of military life. They'll look at your stuff and tell you exactly what to keep, what to consolidate, and how to prep for your next move. And the best part, it is 100% free for service members and their spouses. You are absolutely entitled to this help, so take advantage of it.
So, what happened to Sarah? Well, that brings us to Sarah's comeback. She didn't just sit there and accept being financially invisible. Instead, she took this exact playbook and put it into action to rewrite her entire financial future.
Look at this incredible turnaround. In year 8, she gets denied on that mortgage application, but she gets to work. By year 9, she opened her very own primary card and automated all our payments. Year 10, right before her next big move, she sat down with a base counselor to strategize. And by year 11, just 3 years later, her file went from literally unrateable to a rock-solid, independent score. She and her husband successfully refinanced their mortgage, and this time both of their scores strengthened the application.
And that really brings us to the ultimate bottom line here. Instability in life does not have to mean instability in your credit. Yes, the banking system loves and rewards consistency, but as a military spouse, you have the power to deliberately engineer that consistency and build your own independence, regardless of how many times the military tells you to pack up your house. So I want to leave you with this final thought to chew on. Are you letting your constant moves shrink your financial footprint, or are you using them strategically to build an empire?
It is time to take control of your independent file. Listen, if you found this explainer helpful, do me a favor and drop a comment right now. Tell me how many times you've moved as a military family and how you're going to use these strategies to map out your own comeback. Thanks so much for hanging out and learning with me today.